good competitive rate today, and you can get the house and pay less for it. And then when rates drop, you can come back. VA has something.
All right, hey, and welcome back. And today we got Bob back with us, the master of the loans. And today we're going to be focusing on the VA loan home buyers. We're going to talk about some of the benefits of the VA and why, if you are in the market today, why the VA might be the biggest advantage for you to get the VA loan today or in the future. We'll see how that makes sense here in a little bit. So, Bob, thanks so much for coming back and recording with us.
Yeah, thank you, Scotty, for having me.
Yeah.
Always excited to be with the Gifford group.
Yeah, I appreciate that. So today, in this market, we have seen some rates are starting to creep back down. I think the Fed is, talking about cutting those rates in the future. But like, if you're a veteran and you are in the market to buy, like I personally think it's one of the best loan programs around if you are a veteran, especially if you have any type of disability, right? Because you can get that VA funding fee waived, which is a huge benefit. And if even with the VA funding fee having to pay a little bit of that, it's still a great loan program because you can get that 0% down, right?
Well, it's 0% down. And what a lot of people don't realize, a conventional loan, your credit score determines your interest rate. On a VA loan, if you have a 640 FICO or a 780 FICO, you get the same interest rate. On a conventional loan, if you have a 640 FICO versus a 780 FICO, it's a totally different because of loan level price adjustments that Fannie Mae and Freddie Mac put based on credit score. The credit score on a VA loan does not affect. That's one of the huge benefits. You mentioned the other one, it's zero down. And the fantastic part about this, thank you for all veterans. I love helping veterans. Thank you for serving our country. Love to help them get into loans. And I learned about 20 years ago, the VA wants to put veterans in homes. So they're more lenient than FHA conventional, meaning you could have if you have a decent credit, I've been able to approve loans with a higher DTI, debt to income, on a VA that I could never get approved conventional or never get approved FHA, because that goes back to the VA system, which is different. You go in there and they approve the loan. What part of the myth about VA loans are, they're harder to get. They're really easier to get. Some people, professionals in real estate, also think that they're harder to appraise, and they're not harder to appraise. And the loan doesn't take any longer to do. The only difference is on VA, you order the appraisal through a VA portal, and a VA approved appraiser appraises the house. And a lot of people I know that have been doing real estate for decades think, oh, it's a harder appraisal. And no, it's not. It's no different than if an appraiser walks in a house and sees a chandelier has been taken down and the electric wires are hanging down. An appraiser is going to note that. A VA or FHA appraiser is going to say that's a health and safety issue, needs to be repaired. But they're not going to. I like to tell people, appraisers don't carry ladders. I've never seen an appraiser drive up to a house with a ladder strapped on the back of their Toyota Camry, or they don't carry toolboxes. That's the difference between an inspector and an appraiser is important. All the time that I've been associated with the mortgage business, VA appraisals are easy. They're not a challenge. They don't come in undervalued. And here's my thoughts. So here's what I'm telling clients today. If you are in the market and you're a veteran and you don't have a home, especially if you're a first-time home buyer, take advantage of what the VA benefits have and buy a house. And you may say, well, I was waiting for rates to come down. My speculation, I'm not an expert. If I was, I wouldn't be on this podcast. I'd be on my boat in the Bahamas, on a yacht, if I could predict exactly what's going to happen with interest rates. And I'm obviously, you see, I'm not. So it's just experience and speculation. But I believe that interest rates will come down. As soon as they start to come down, we're going to see exactly what happened when interest rates were lower, home prices were up. And I think you've seen, as a professional real estate person, Scotty, haven't you seen a little bit more competition and homes staying on the market longer and not selling as fast as they were 2 years ago?
Yeah,
Have
definitely
you?
with the rates being higher, we've seen homes sitting longer, and some sellers are offering some concessions to help move their homes, right? Which then people could use to apply toward their closing cost, and maybe either buy their rate down or to just bring their less cash to close, which has been more advantageous for the buyers right now in this market. So less competitive. You got to be your credit being lower. I mean, that's a big advantage of the VA, and then not really having this upper limits that are predefined on the DTI ratios or the debt to income ratios is a huge bonus for the VA buyers. And just cap all that off, like being a homeowner, we know that's one of the ways to build wealth in America, right? Because the home is an appreciating asset, and unlike a lot of things Americans buy, which depreciate or don't have any value, like furniture or cars, right? They'll both lose value pretty quickly after we buy them. So at least that's why I think the VA is so big on pushing home ownership, right? Because they know it's good for them and good for America, right? So like, why not? So those are both great things, are all three things that I think are really great about the VA loan.
And I would add on, if you buy one now and you get a good you get a better rate than conventional. VA rates are government rates are always lower. So you get a good competitive rate today, and you can get the house and pay less for it. And then when rates drop, you can come back. VA has something that is it's called an IRRRL, and that's not EARL like your buddy Earl. It's a VA IRRRL, IRRRL, which stands for Interest Rate Reduction Refinance Loan. I know it's the government, so they got to have everything spelled out that way. But a VA IRRRL is fantastic for a couple of reasons. One is it's got to be a benefit to the veteran. So if they get a home today in the 6% interest rates and rates drop down to 5%, they can do a VA IRRRL and reduce their payment, reduce either the payment and or the months that they owe on the house. We can do loans for any year, not just 30, not just on the 30 and 15 and all that. We can done a lot of during the refi, we'll do a lot of 23-year loans or 19-year loans because they'll keep the payment the same. They just drop a ton of years, which saves them hundreds of thousands of dollars over interest over if you say knock 10 years off. But an IRRRL is non-income qualifying. So you don't have to prove income. So it's truly it's a fast interest rate reduction loan. There's benefit to the veteran, and they got to have two things. We run a mortgage only credit report, and it just shows that they pay their mortgage on time. And if they do, and they have that, then they qualify for an IRRRL, which is an easy loan to do. So buy the house now where you don't pay 25, 50, $75,000 more for that house, and then refinance it in 7 months. VA loans, you have to hold the loan for 7 months to be able to do a VA IRRRL. So 210 days. So that's something to take into consideration, but that's what I'm recommending to people.
Yeah. So like, and I'll try to get this video out as soon as possible, but realistically, like in today's market where the houses are kind of sitting longer, sellers are kind of more, they can't be as picky, right? When a buyer comes along. So they have to kind of do what, maybe the buyer has more of a little bit more power than before. And when we're in the seller's market, so maybe the buyer can negotiate, and we've helped buyers negotiate, $10,000 in closing costs towards so they get less money out of pocket today. And VAs already have one of the lowest out of pockets costs already, but they can get most of that paid for by the seller. And then in a year or two, if rates do continue to go down, like we think they will be, then they can refinance. So they got the home today. The home will continue to appreciate 3 to 4% on year, we typically see. So now you got the lower rate in the future versus just sitting on the sidelines and then waiting, and then prices continue to go up. And then you don't get that advantage because everyone else jumps back in the market because rates did drop, and now you're competing with everyone else again, right?
Right. And a seller can give up to 4%
4%.
seller contributions on a VA loan. So if you're buying a $400,000 house, that's $16,000. Well, you have zero down payment, 16,000 will pay most of your closing costs and prepaids. What prepaids are, as you know, are 1 year of insurance, and you're prepaying the taxes. So it's a great time not to think, well, I'll wait till everybody's back in the market, because a couple of years ago, it was definitely a seller's market. And right now, I would say it's kind of a buyer's market. But once rates go down, it's going to go back to a seller's market, because it's going to force people that have, their first or second home, and they're thinking about a bigger home, they have more kids, then they'll say, well, let me sell my house and I'll buy a bigger house. And that's the cycle that we go through.
Yeah, and we were talking, just we have a VA buyer that's buying right now, and we told them too, like, this kind of a starter home for them, right? There's a couple with no kids right now, but eventually they talk about having kids, and it's like, hey, you can either refinance your conventional in that home in the future if you want, or you could keep that loan and then go use a conventional loan the next time you buy. Because usually, sometimes the second time when you're buying with the VA loan, you might not get those benefits because you used your entitlement, and if you're not selling that home, your entitlement will stay with the property. But conventional, if you can save the 5% down, like, you can use that right in the future if you want. So you can get the first home, very little down, build the equity over, the 5-7 years while you're there, and then move up to the next house, and then keep that one as a rental. And then we can wash most of that income away, or debts away, with a rental property. So it's like, I like playing the real estate game. I'm a real estate guy myself. That's where I'm all in on. Like, and one more thing that I'll mention, I think we can wrap this video up if the people are still sticking around and watching this, is that if you are interested in getting a VA loan, you can check out thegiffordgroup.com. We have a mortgage calculator. We have a buyer cost calculator where you can put in the VA and show that, hey, you got zero down, what's your closing costs, give it a good estimate of what that would be. And then obviously we can help you out doing the loan. And me and Amber can help you if you want, to help you find that home here in Houston market area or anywhere in Mom's, Texas. So,
There's one more
is
thing I
there?
want to add to what
Sure.
you said, which is really very important. It's the VA gives you a certain amount. It's called a certificate of eligibility. And I've done a lot of loans where somebody gets a VA loan and they buy a $250,000 house and they get it. And then they want to buy another VA loan. And if they have enough eligibility, they can have people don't realize you can have two VA loans. Now, you can't have a $750,000 first purchase and then try to buy another $900,000 house on a VA loan. So if you're buying a lower priced house because it's your first house, there's a chance you could keep that as a VA loan, convert it to an investment property, and buy another house with a VA loan if you have enough eligibility.
Yeah, it just depends on how much eligibility you have left on your COE.
One other huge thing is for veterans. If they want to buy, it used to be limited to, a few years ago, it was 417,000. And then it went up to the normal conventional limit, which is 750 plus thousand right now. But I've done a lot of VA loans that are 1.4 million, 1.2 million, 900,000. You can go up. They passed that ruling a couple of years ago. So somebody could buy a $1.4 million home on VA and no down. That is huge, because if they're in a jumbo, they'd be putting $280,000 down, 20% on a $1.4 million house. So just wanted to throw that in also. Yeah, I know that people that are buying their first 400,000 aren't thinking about a 1.4 million, but the person who has a $500,000 or $600,000 house now, 3 more kids, they want a bigger house, and they're a veteran, they can use their veteran benefits to buy a jumbo home.
Yeah, no, that's a great point right there. Not having to worry about putting that 20% down on those over $800,000 homes right now is just going to save you tons of money in cash, right? And I do think, like, if it's a $800,000 house versus a $400,000 house, well, they're both kind of going to appreciate the same rate, right? I mean, at the $800,000 house, you're going to see a lot more wealth built in that home as it appreciates versus the less expensive home. So,
Plus, they get VA pricing versus jumbo investor pricing. And I could go on for 15 or 20 minutes on that. I won't. I'll just tell you, VA pricing is better than anything else you can get.
awesome. Well, hey, let's do this, Bob. We'll end the video here on this one, and then we'll bring you back and we'll talk about VA loan assumptions, because I know that's kind of big right now with the market. People are looking at that. So check out the next video with Bob, and we'll talk about more about the VA loan assumptions.
Sounds great. Thank you, Scotty.
Thanks.